We're half an hour away from the open in Hong Kong. You're watching The China Show. I'm Annabelle Droulers.
And I'm Yvonne. Our top stories this morning. Stocks and futures in the red, with China accusing the U.S. of provoking new trade frictions as President Trump doubles steel and aluminum tariffs. Oil jumping despite that latest OPEC Plus output hike.
The U.S. Defense Secretary tells the Shangri-La dialogue that Washington remains committed to countering China, moving to reassure Asian allies.
And Hong Kong developer New World jolts creditors by delaying bond payments as it struggles with almost $27 billion of liabilities.
Well, a very happy Monday morning to everyone, but really coming into the week, the focus is coming down to trade once again. So you're taking a look here at the broader cross-asset board today. We're seeing stocks a little bit under pressure, and as well, US futures, they're pulling back. What is driving that? As I said, it's really these trade tensions. So Friday, for instance, you had President Trump signaling that duties or tariffs on steel and aluminum imports are going to be doubled. So that, again, is having a bearing this morning in the session. Second to that, we had Ukraine striking deep into Russian territory at the weekend. Moscow as well retaliating to those moves. But it certainly complicates the picture ahead of key, crucial peace talks that are expected to kick off this week. So oil tracking that as well very strongly, because we actually are seeing oil moving higher, even though we had OPEC Plus pushing through with a third straight output hike. Let's shift on, take a look at some of these movers in particular today, because again, as I said, it's those steel, aluminum names in focus. You are seeing these down across the board. Duties going from 25 to 50%. What has been interesting are the moves that we've seen in Nippon Steel, not really seeing the same downside pressure as other names, but this is a move that actually could benefit them because Nippon Steel's deal with US Steel is expected to proceed. So that's the state of play there. But let's shift on, because take a look at how this is setting us up going into the open today in Hong Kong. As I said, mainland China is shut for the session, but still watching these names or these markets closely. A lot of movers to track. Firstly, you've got some steel names. Secondly, you've got some semiconductor names, because the Trump administration is looking to broaden restrictions or sanctions on some Chinese semiconductor names to not just include the parent companies, also some of the subsidiaries. And then as well, to the upside, perhaps we'll track some of the Macau casino names, because the Golden Week revenue, Yvonne, came in better than expected.
Yep, certainly one to watch there as well. You take a look at how the data is playing out. Maybe we're still seeing some better data as we get into that sort of 90-day period trade truce as well. Meantime, let's get you caught up with what's happening in Ukraine. It has staged a series of strikes reaching deep into Russia as Moscow launched a heavy attack of its own on Kyiv. The escalation comes ahead of a second round of peace talks scheduled today in Istanbul. Let's bring in our senior editor, Bill Ferries, with the latest. The timing of it is quite interesting, but just tell a bit more, Bill, of how significant this latest attack is.
Yeah, it's a pretty audacious attack by Ukrainian officials here. President Zelensky saying it's been 18 months of planning to carry this off. 117 drones were launched from after being hidden inside homes, little wooden homes that were being transported on trucks. They hit targets from the very far east to just around Moscow, all the way up north near the border with Finland. Multiple sites. They believe that perhaps more than 40 aircraft were severely damaged, including a lot of Russia's strategic long-range bombers. These are the kind of planes that can carry conventional or nuclear weapons. So the head of Ukraine's security services estimating at least $2 billion in damage from this. And one of those kind of longer-term, longer-planned attacks that were probably in place ahead of these peace talks scheduled today in Turkey. But certainly the timing is very interesting and will set the tone. Russia, of course, has been unleashing multiple barrages of drone attacks and bombardments against Ukraine, including some of the biggest of the entire 3-year war. So both sides really ramping up their strikes on each other and showing what they can do, what they're capable of heading into these talks.
Yeah, so Bill, let's get into the talks in more detail then. What exactly are we expecting to come from these discussions that kick off, as you said, later today?
Yeah, it's hard to know. I mean, this is the second round of talks. We had a first round last month that resulted in prisoner release. But, in terms of making progress towards a ceasefire, we haven't seen a lot of that so far. It's hard to know if some of this is more performative. It's very important for Ukrainian President Zelensky to show the United States that he's serious about these talks. The delegations from Ukraine have been higher level than from Russia. It may be a situation where we see more talk about prisoner releases. Ukraine has said they would like to see more progress made on the release of children hostages that have been taken from occupied areas. And they'd also like to see what Russia's specific plans are, what its memorandum is to reach a ceasefire. That's something that they say Moscow has been holding back on so far. That's another detail we may get from this. But in terms of a major breakthrough, I don't think either side is expecting that quite at this point.
That was our Bloomberg senior editor, Bill Ferries there. Thanks so much for your time. And of course, really interesting that you had those moves at the weekend as we had the Shangri-La dialogue taking place as well over in Singapore. And the US Defense Secretary Pete Hegseth has reassured allies in Asia that Washington does remain committed to countering China in the region. For more on his message at that event, as we said in Singapore over the weekend, let's get more with Avril Hong joining us now. So, Avril, the message that Hegseth, Pete Hegseth, has delivered at this event has been tracked very closely, particularly as you had J.D. Vance sending sort of a different tone over in Europe several weeks back. But what exactly did he share?
Yeah, absolutely. I mean, to your point about J.D. Vance, I think there were some concerns coming into this forum that we could see a repeat of that sort of messaging from the US Vice President towards European allies on how they needed to up their military spending, really ripping into these European counterparts and also criticizing them for the war in Ukraine. Of course, this is also coming against the context of the concern that perhaps Pete Hegseth would engage in some grandstanding, this former TV personality. But it turns out that they needn't have worried that much. From this forum, he actually managed to garner some praise, the US Defense Secretary. And it was really this idea of, being able to engage with these allies without the Chinese defense minister at the forum. Of course, this is for the first time since 2019. So able to set the tone, set the pace as well. And he even demonstrated how he kind of was able to grasp the nuances because when he engaged and, communicated with some of these allies, he couched the idea of upping military spending as a requirement to prepare for a potential Chinese invasion of Taiwan. That being said, even though I think his trip has been largely received as a positive or a success, that's not to say that it was enough to offset some of these allies' concerns of erratic policymaking out of the U.S., especially from Trump.
And it seems like he was praised for also, I guess, capitalizing on this moment of China not being there to actually talk about China in some ways, right? And maybe a good opportunity for everyone there to talk about what's going on there. Let's take a listen to what Hegseth had to say about the mainland in particular.
We do not seek conflict with Communist China. We will not instigate nor seek to subjugate or humiliate. President Trump and the American people have an immense respect for the Chinese people and their civilization. But we will not be pushed out of this critical region. And we will not let our allies and partners be subordinated and intimidated.
And Avril, China didn't send a defense minister for the first time in a few years or so. What was the response from Beijing on this?
Yeah, even though the defense minister was not present at this year's forum, China still rejected these comments from Pete Hegseth, not just his comments about Taiwan, but also about not sending a defense minister to the event. And China also rejected some other comments from European leader, the French President Emmanuel Macron, who basically suggested that you can see from the global response to Russia's invasion of Ukraine, that in some way informs how the world would react if we, in the event of seeing a potential Chinese invasion of Taiwan. Again, this is something that China strongly rejected. But overall, the takeaway from this event and China not being present in the capacity of the defense minister is pretty much that it was a missed opportunity, because you think about how this forum is typically a platform for really high-level military communication, and all this is coming at a time when China has been trying to position itself as a more reliable partner to Southeast Asian countries, right? What does it say that they were not even in the room? And the Singapore Defense Minister, Chan Chun Sing, actually went as far as to say, kind of encapsulate this sentiment that if China thinks the world doesn't understand it, then it's really incumbent on China to seize every opportunity to make their voice heard. So as I say, this event really seen as a sort of missed opportunity for the Chinese side.
April, thank you. April Hong there joining us out of Singapore. Coming up, we're going to be live from the World Air Transport Summit in New Delhi, where we'll get the aviation sector and the CEOs of Hong Kong Express, Air India, and Air New Zealand all speaking with our very own Guy Johnson on the field there. And we're also counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Mainland markets are shut. Hong Kong futures, though, seeing a bit of pressure here this morning. You're watching the China Show. Happy Monday.
You're watching the China Show this morning, taking a look at some of the big events on the agenda in Asia this week. Standing out is the South Korea presidential election that's taking place on Tuesday, ahead of course, inflation figures that are due on Wednesday as well. Inflation's sort of a theme of the week. You've got that in Thailand, Taiwan, Philippines on Thursday, but also some rate decisions. For instance, the ECB, the RBI as well, going to be very closely tracked, expected to extend its easing cycle with a third straight one. And PMI readings, of course, that's sort of the main one from China this week. Jobs data, I mean, actually it's quite busy this week, but you know what else is going to be really just front and centre is trade, and you really can't go past the headlines over the weekend as well. Steel, aluminium duties being hiked, plus, you know, all of the tensions around Eastern Europe.
I think, yeah, what we heard last week from Trump about what this truce with China is looking like, right? The fact that they're saying that they're violating some of the terms or whatnot. We're not getting too many details on what they're talking about, but that's enough as just goes to show. If things don't go well in trade negotiations, you start to hear from the president once again. And we're starting to see these headlines come through. Let's bring in Herald Vanderland, head of Asia Pacific Equity Strategy at HSBC. Harold, always great to have you. Seems like trade frictions are re-emerging once again.
Yeah.
Is this still going to be an overhang on markets?
Basically, take a look at the bigger picture, right? So we started with this about 10 years ago. We had trade frictions that we had talk about. Can Chinese companies be listed on American exchanges? That was a big topic for the time. Education is now coming into that fold. All of these issues I presume, will continue to unfold over the next couple of years. Now it is tariffs on steel and aluminum and these sort of products. That in itself actually is more of a problem probably for the auto industry in the US. So that doesn't necessarily hit Chinese companies directly or so, I think. So yeah, that will remain with us for quite some time.
The bigger theme that is emerging is that Asian equities are seen as some sort of structural alternative to the US. Now, do you think that remains intact?
Yeah, so we talk a lot about tariffs because that's in the news, right? But what is not in the news is something that has not been announced because it is not there. If they would have set the tariffs on, what was it, the 2nd of April, so we're going to put these tariffs in place, good. If on the 3rd of April, the 4th of April, they would said, okay, now we want, what are the leading technologies for the remainder of our life? AI, robotics, EVs, renewables. If the US would have said, we're going to make it really attractive for you to invest in the US in those particular industries, and I don't know, for example, say anybody who graduates in any of these topics, your tuition fee is for free. Yeah, then you attract people, and then people want to invest there, right?
Yeah.
That hasn't happened. And actually, in a lot of these industries, China is either leading or not far behind. AI, it's probably, I don't know, 9 months behind. EVs, it's probably 9 months ahead. So that means that actually it allows these companies to flourish, to export, and that's good for Chinese equities and Asian equities. That's right.
So that's the reality then, that sort of end of or the question marks over US exceptionalism, whether it could sustain, you still see that continuing to erode and that money continues to be going into, say, Chinese markets?
Yeah. There is good prospects for these companies to flourish. They're not being hampered as much as the tariffs would suggest, I think. They're exporting their products. EVs is the classical example, but we're going to see very similar sort of patterns emerge. And in, for example, let's say in healthcare products, we see this already. We see this in AI, in robotics, industrial robotics. So China is technologically behind on certain areas, but in a lot of areas it's getting pretty close. Yeah. So they can...
Something that we haven't talked about is China's relevance in some of these EM funds, right? We've basically seen that deteriorate since the pandemic.
Yeah.
Things are starting to rise again, though. I mean, can we see this weight continue to recover?
Yeah. So I think 2 years ago, something you and I would have talked about, hey, there's this rise of Asia, ex-Japan, ex-China funds. That is still rising because there's a group of people who'd like to do that. If you're if you sell, let's say, Asian pension funds or mutual funds into the US, selling China is still, marketing-wise, maybe a difficulty. But yet China has recovered, of course. The market has recovered. There's new interest. It feels like the dynamic is differently. Property is looking a little bit better. So people are flocking back to that particular market. That's right.
Why then, if there's that level of optimism around the health of at least China's innovation outlook, why do you think then that there's so much wealth that's sitting on the sidelines and households that are just really have these major cash stockpiles?
Yeah, so the biggest cash pile on the planet that ever existed, actually, is 22 trillion US dollars. It's not a US dollars, it's the RMB equivalent. But it's about 22 trillion US dollars. We calculated how many containers of used 100 US dollar bills it is, and we found it's about 7,000 containers. So it's a lot of money, right?
Yeah.
Why are they sitting on that cash pile? Because, well, you didn't want to invest in equities over the last 3 or 4 years. You were unsure if you would lose your job during COVID. The property market didn't look really interesting either. So what have Chinese households done? They've done what everybody does. You don't do anything, and you hoard cash. Now, that $22 trillion, a lot of that is, of course, money that people need in order to finance their own sort of retirement over the next couple of years. But you do a bit of financial wizardry and you try to filter that out. We think there's at least $6.5 trillion US dollars that could actually throw rather freely into markets. Could be property, could be, it's already in bonds to a certain extent, but could be bonds, but could be equities as well. And that explains that very strong southbound flow that we've seen since the beginning of the year. And my suspicion is that that could well continue for at least the remainder of this year, maybe the year thereafter.
So where can you still chase in this Chinese market then?
Where can you still chase in this Chinese market? I think there's a couple of areas to go. So you can look, for example, at banks. Banks give you 6, 7, 8% yield. And to be honest, the
still
share
a defensive play, is it? Or?
Yeah, but the share prices might not go anywhere for the next 10 years. But if you get 6, 7%, you'll double your money in about 10 years' time. That's not bad.
Yeah.
So that's an area to go to. I still think in those areas what I highlighted, companies that will become global leaders in their respective industries. And that could be in healthcare, that could be in industrial robotics. We see companies emerging, of course, EVs. Those places I would go for as well. And you have now these domestic Chinese brands like, bubble tea, milk tea, and these sort of things. I was in Central Java, what was it, about 3 weeks ago, and there you go. You see Chinese bubble tea companies emerging. I was wondering if it was a fake one or not, because it looks a bit fake. You have that sometimes with Starbucks as well. But so they're expanding in the region as well. So there's an area to look at as well.
But you say bubble tea, and it also makes me think about the amount of listings that we had, not just for bubble tea, but for other tea chains as well.
Yeah.
The Hong Kong IPO market, what's your sort of... Oh, you did the dollar sign.
Yeah, no, actually, I was clipping. It's coming back to life. That's what I meant, actually. That's right. Yeah. No, but you're absolutely right. So you have a story now whereby there's an enormous amount of cash in China. There's companies who could not IPO or list their stock in the last 3 or 4 years. Some of them, I suspect, would be quite eager to do. So they're coming to the market, and you see that money starts to flow around again. So the IPO market is coming back to life. I wouldn't be surprised if the Hong Kong market is going to be number 2 or maybe 3 in the global ranking list by the end of this year, and it's going to be back where it used to be in the last couple of years. Yeah.
We're almost done with the earnings season in China. Your take so far?
Yeah.
I mean, tech earnings have been pretty mixed overall. But,
tech earnings have been a little bit missed, but overall okay-ish, I would say. There was 1 or 2 companies that missed a little bit. I think think the earnings in China, this is the interesting thing, it doesn't seem like it's really a big story in the sense that over the last couple of years we had earnings downgrades. We don't see that anymore. Net, we see actually a little bit of upgrades, but let's be very careful with that.
Yeah.
It's really earnings in the rest of the region, India in particular, where we're looking at. But for the moment, for China, earnings just above, say, 10% seems to be a very reasonable assumption to make.
I want to broaden out a little bit, but you just wrote a new report about Hong Kong equities and how to take advantage of this low HIBOR more. Yeah. How do I do
so? What do we do? Yes? Yeah, no, that's right. So HIBOR is at the moment very low. I suspect if the Hong Kong dollar would weaken, that we actually see the HIBOR goes up. Now, that would be, if that were to happen, maybe a little bit negative for the markets in the very near term. But I think what we work on, we've got to look through this. HIBOR in Hong Kong will be lower than it was over the last 5 years. So it will be structurally lower. And that's because liquidity is coming back into the region. That is what we just mentioned, right?
Yeah.
For example, US money being reallocated to Asian equities, but also the Chinese southbound flow. All of that flows over into Hong Kong. So HIBOR will be lower, and that's supportive for equities. It's good for property.
Yeah.
It's not so good if you're a company and you're sitting in a lot of cash and you have it in HIBOR because you don't get as much interest income. But for, in particular, for property in some of these sectors, that's good news. Yeah.
All right, Harold, thanks very much for your time. That was Harold van der Linde, there, head of APAC equity strategy at HSBC, and having a look at futures just as we await the market open here, 7 minutes to go. But looking for a little bit of a drop ahead, and that's really just reflecting what we're seeing across Asia today. Trade tensions in the fall, really. President Trump vowing to double aluminium and steel duties imminently, 25 to 50%. But that's it there. We'll have plenty more ahead. This is Bloomberg. You're watching The China Show, taking a look at Hong Kong in pre-market, and we're guiding for more than a percentage drop at the open.
Yeah, mainland markets are closed. I hope you're getting your rice dumplings in, but certainly we're seeing some pressure here across stocks. We're watching the EV sector in particular here. There was some good news, though. BYD reported May sales that were the best this year. Xiaomi talking about preparing for mass production of its SUV model, but there you go. We're all falling here at this moment. And casino shares also in focus. We saw an influx of tourists during that Golden Week holiday, so we saw that in the gaming revenue for May, but we're seeing a mixed picture when it comes to some of these casinos here right now. But yes, it's going to be a pretty volatile day. It's going to be all about tariffs. We'll get you through most of it here. That open is coming up next. You're watching The China Show. This is Bloomberg. Happy Monday to you. You're watching The China Show. We're counting down the open of markets here in Hong Kong. Keep in mind, mainland markets are still shut for the Dragon Boat Festival, but we are seeing a bit of pressure here when it comes to Hong Kong equities at the pre-market. You're already seeing signs of weakness there, just given the headlines that we're seeing when it comes to President Trump. Once again, with these trade frictions re-emerging, they're talking about this trade truce with China being violated, and a lot of dialogue that happened during that Shangri-La dialogue in Singapore on China as well. So that is certainly front and focus here this morning, Bill.
Yeah, well, of course, China not sending a high-level dignitary to the talks and also kind of leaving a vacuum for the US to step into and to pledge to have greater cooperation with some of China's neighbours in the region, Philippines, for instance, really standing out. But you've got Hong Kong just coming online this morning, and as you said, it's really that focus on trade tensions, also around semiconductor and tech, because they're looking at expanding the restrictions on Chinese semiconductor names.
Let's not forget the doubling of tariffs on steel and aluminum. That was something that was a headline over the weekend as well, so we'll watch the commodity space in particular on that as well. But here's how Hong Kong's faring. We're down about 1%. HS Tech seems to be weighing on the benchmark overall. MSCI China also down about 0.9%. It seems like most of the big tech names are also in the red here, particularly take a look at Alibaba. We're down close to 2%. Same goes for Xiaomi. So despite some good news that we heard on the EV sector, right? BYD sales were the best this year. Xiaomi also talking about mass production of that SUV. Those headlines, not enough to go with this current of bad news that we're seeing seeing when it comes to tariffs here this morning. The renminbi is pretty stable, though. We're still having around the 720 level, but there you go. That's what we're seeing when it comes to the EV sector. The big news last week was about BYD and these price cuts. We had this auto body did talk about it, slamming the vicious competition that we're seeing domestically from these EV makers, and BYD is down another close to 4% this morning. We're watching oil stocks given what we've been seeing. So OPEC Plus did raise production as expected, but then again, we're seeing oil prices rise despite that. There's a lot of geopolitical tensions there. It talks about sanctions on Russia, talks about what's going on in Ukraine and the like here. But then again, the oil names are actually falling this morning. Sinopec is down some 1%. New World, that's the big one. So the big news is that they weren't able to pay their creditors here and delaying these bond payments. There you go. We're down some 9% for the stock in particular, and certainly that's going to be a key thing to watch here and what comes next for the company, though. Yeah,
it's certainly not a headline that sounds good, and I guess in the market reaction today, it's being reflected, the investor concerns around this too. But let's get more on this latest development, bring in our China credit reporter, Pearl Liu, joining us. So, Pearl, what exactly happened? I mean, I think you can see the market reaction. You know, investors are a little bit spooked by this.
Yeah, I think investors are basically a little bit surprised. So basically, New World delayed, basically it deferred the distribution of four perpetual bonds, which basically is not the default. But still, like usually when you buy perpetual bonds, that's the steady income you get. So when you don't get it, you got surprised and wondering what happened to the company.
Yeah, I mean, obviously, why defer now? And other ones, what does it tell you about its liquidity position at the moment?
Basically, I think the market believe that sent a very serious signal that the company is not having a lot of cash. So basically, it's going through some liquidity crunch. But there are good things and bad things. Basically, if you don't pay, you save some cash. And also, it's going through some loan talks. And I think, basically, according to our reports, it's going quite smoothly. And as of last week, out of 80-something billion Hong Kong dollar, it has already secured 35 billion. And I think we're expecting is getting more security from the banks. So there are good news about New World as well.
So do you think then this is sort of short-term pain for long-term gain? Do you think that this actually fundamentally changes the prospects for the business, delaying these payments?
I think basically people are just curious about whether fundamentally the company has the willingness and also the company has enough cash to pay all its debt. But the thing to us, according to the deferral and the talks with banks, apparently the company is now prioritizing the loan talks, which is also reasonable because the deadline is by June. So we are expecting after the refi talks, we will see more new financing through banks. And also we are going to see whether the company is going to call or to pay the distribution of perpetual bonds and also pay the coupon of its bullet corporate bonds.
Yeah, a lot of questions still, I think, when it comes to the story. Pearl, thank you for helping us answer some of them. Pearl Liu joining us there with the latest when it comes to New World. Let's get to some of the data that we got over the weekend when it came to the factory activity that actually did improve in May. That's thanks to that trade war truce with the U.S. But, of course, a lot has been up in the air right now. But output remained in contraction amid those lingering uncertainties. Let's bring in our China correspondent, Min Lo, to break down those numbers for us.
Yeah, so the PMI saw a bit of relief thanks to the trade truce. So the manufacturing PMI came in at 49.5, which was in line with expectations. But as you said, still below that 50 threshold. And it's thanks to some of the sub-indexes. You look at the production output sub-index that expanded, new exports order in particular, a big bounce there, reflecting how importers are perhaps stockpiling more products from China. And we might continue to get that tailwind in the next 2-3 months. Plus, you have the PBOC cutting rates as well in May. And then you look at the non-manufacturing sub-index that slightly undershot expectations. There was the May Day holiday that gave a bit of a lift to the services sector, especially some of the catering, accommodation, tourism-related sectors. Construction and slight slowdown in the expansion there, but still pretty robust given the support from government spending. So overall, looking quite good. It could give the government a little bit of breathing room while they observe and figure out whether more stimulus are needed come July when the Politburo is going to meet to discuss the economy again.
We got some headlines from the Commerce Ministry this morning in China and a statement as well, but it was a little bit unclear exactly what they were referring to, but definitely going back at least to the trade talks in Geneva. So can you share the details of that?
Yes, so Trump actually accused China of violating the agreements made in Geneva. And he didn't elaborate how, but we have Jamieson Greer in another interview expressing concern about China's slow pace in implementing the rollback of some of these measures, countermeasures, especially when it comes to the flow of critical minerals. And China responded saying, essentially turning the table on the U.S. and saying it is the U.S. that is violating the terms of the agreement with all of these unilateral discriminatory acts on China, including the revoking of Chinese visas, expanding of chip curbs like the H20 chips, expanding the curbs on the sale of chip software to China, saying all of these really shows how the U.S. is the one that is provoking these trade tensions and calling on the U.S. to correct its mistakes. So both sides trading accusations with each other, and it's not clear whether, given the souring sentiment now, whether presidency will be willing to have that call with President Trump, which Trump says he's confident he's going to have. His economic advisor said that call could be happening sometime this week. But again, how much weight can we put behind that is the question.
All right, Min Min, that was our China correspondent, Min Min Lo there. And actually just on that point of frictions and trade relationships between the US and China, there was that reporting as well that the Trump administration is looking to broaden restrictions on semiconductor names in China. So there are already sanctions on certain companies within China that are in the semiconductor space. But now we're actually understanding the Trump administration wants to broaden that not just to these companies, the parents, but subsidiaries that operate beneath them as well. So certainly, again, just a broadening out of the restrictions that are already in place on the semiconductor industry in China. But those names are under pressure there.
Yep, we're watching, of course, that and the supply chains of those companies, certainly, as we look at this headline. In the meantime, the U.S. has also asked Australia to dramatically increase its military spending to 3.5% of GDP. And the U.S. Defense Secretary Pete Hegseth made the request during a meeting at the Shangri-La Dialogue in Singapore with his Australian counterpart, Richard Marles. In response, Prime Minister Anthony Albanese says Australia will determine its own levels of military spending. Canberra is currently on track to boost its defense budget to 2.4% of GDP over the next decade. Now, meanwhile, Richard Marles also told us that China's rapid military buildup means a U.S. presence in Asia, remains crucial.
China is engaging in the biggest conventional military build-up that the world has seen since the end of the Second World War. And that's happening without a strategic transparency or a strategic reassurance for the region, for its neighbours, indeed, I think, for the world. And it really is, I think, the issue which so many of us are grappling with. So in that context, America being focused on the region is really important. We need to be working with America to provide balance in this region and also to do everything we can to see a region which is underpinned by values that we share with the United States of democracy and the rule of law.
We saw China's defense systems on display during the conflict between India and Pakistan. What's your takeaway from that? Have you been surprised?
We have been very aware for a long time that China's quantity of defence material is vast, but also its technological capabilities are very significant as well. I mean, they are building up a formidable defence force.
That was the Australian Defence Minister Richard Marles speaking with Bloomberg's Haslinda Amin. And some of the other headlines that we're following around the world this morning. Iran has rejected a UN nuclear watchdog report accusing it of nuclear violations, claiming the agency is motivated by politics. The report says Iran has expanded its stockpiles of near-weapons-grade uranium and failed to report nuclear material and activities at 3 locations. Iran says the findings are based on fabricated data and repeated that it's not seeking atomic weapons. OPEC Plus has agreed to increase oil output for a 3rd month in a row, despite reservations from key member Russia. Oil-producing nations say they're adding 411,000 barrels a day to the market in July, matching increases scheduled for May and June. The supply hike is seen as a move by Saudi Arabia to punish overproducing members, recoup market share, and satisfy President Trump's desire for cheaper oil.
And coming up, we are live from New Delhi at the IATA AGM and the World Air Transport Summit. We got Bloomberg's Guy Johnson. He's there, Guy. It's great to have you here in the region. What's on the agenda?
We've got a busy show coming up. We've got lots to talk about over the next few hours. In a few minutes, we're going to be joined by the CEO of Hong Kong Express, HK Express, the fastest growing airline in the world last year. That kicks things off, but we've got a whole suite of senior CEOs joining us. If you want to know what's happening in the global economy, you ask an airline CEO. They know what's happening with consumer demand, what's happening with business demand, what's happening with the fuel price. They're managing the tariff story as well. There's a lot going on, and if you want to know what's happening, these are the people that you want to be talking to. So we've got some great guests lined up. As I say, HK Express in just a few minutes' time. We've got the CEO of Emirates coming up, President of Emirates coming up. We've got Air France, we've got IAG, we've got Pegasus. We've got all of the airlines that you want to be hearing from as you work out what is happening around the world in this region and in other regions. Everything is connected, and the CEOs that are here are going to be talking to each other and trying to get a better picture of what is happening, and we're going to be tapping into those conversations. So that is all coming up. We're going to be hearing from them in just a moment. As I say, the IATA AGM is about to kick off. This is Bloomberg.
Well, hundreds of global aviation execs are gathering in New Delhi for IATA's annual general meeting. And this year's forum is happening under the shadow of the Trump tariffs, which threaten supply chains that are already facing instability. Let's bring in Bloomberg's Guy Johnson. He's standing by with our next guest, who manages Cathay Pacific's low-cost carrier. Guy.
HK Express, yeah, we are joined now by Jeanette Mao, the CEO of that business. The fastest growing airline in the world last year, so definitely worth paying attention to what she has to say. Good morning.
Morning, Guy.
Thanks for spending some time with us today. It's going to be a busy schedule today, but let's talk about what you're doing at the airline, because you're busy there as well. You've expanded rapidly. You're looking for new destinations. I'm wondering what the priorities look like for the rest of 2025. Where are you looking to keep the growth going?
Yeah, great. I mean, in 2024, we are the world's fastest growing airline, achieving 46% impressive growth in terms of flight. And in 2025, our expansion will be prioritized in Southeast Asia and the China mainland. Yeah. So these two regions, we have seen massive growth opportunity. For example, in Southeast Asia, 3 times of population of Northeast Asia, excluding China. And China definitely is one of the largest population destination. And not only the outbound market, we also see a strong inbound demand into these two regions. So for HK Express, last year we launched 9 new destinations. This year, in just 6 months alone, we launched 9 new destinations. And later this month, we will have 3 new destinations coming. So, and these including some promising destinations in China, in mainland China, as well as in Southeast Asia. For example, in April, we launched Nha Trang, our 4th destination in Vietnam, and we doubled our capacity in Vietnam. And demand from Vietnam actually outpaced the capacity growth.
So there's no... Okay, let's talk about the capacity growth. You're putting a lot of aircraft to work very, very quickly. There's no kind of indigestion. There's no problem with the market absorbing all that capacity that you're putting in quite so quickly.
Yes, so last year, I think Japan definitely is the start destination. Okay. But this year we see actually Vietnam, South Korea are the emerging leisure market for the region. So as I mentioned, in Vietnam we doubled the capacity, but the passenger demand outgrew the capacity growth. And in Korea we also have more than 60% growth capacity, but with our load factor consistently exceeding 90%. So I think these are the emerging leisure destinations for HK Express.
Okay, so talk to me therefore about what I'm learning about consumer demand. It sounds strong. Is that your read as well at the moment? And can you give me a bit of a new, sort of more nuanced sector by sort of or country by country kind of view of what is happening? Where is the consumer strong? Where is the consumer struggling? What is happening?
Sure. I think the demand still holds on, but I would say the competition also being very intensified in the last 12 months. Okay. Taking Hong Kong as example, last year between Hong Kong and the regional destination, the capacity surged by almost 40%, adding 7.6 million seats into the market. Okay. That's more than the entire population of Hong Kong, right? So many of the carriers, including us, HK Express, we are building the capacity, capturing the opportunity of Hong Kong, the third runway system. But also this aggressive supply growth also put pressure on the air yield. So some area definitely, as I mentioned, showed a strong growth, but airfare, the yield is still very, the pressure very big, and showing the accelerating of the airfare normalization.
Are you able to keep, what is happening with the fuel price? What do you do with hedging? Are you able to take advantage of some of the fuel price drop that we're seeing at the moment? Does lower fuel prices mean lower fares, and does that drive demand with those lower fares?
Yeah, definitely. I think we have seen the jet fuel price trending downwards recently, and fuel is one of the largest cost item for airline, and we are benefiting because it's reduced our operating cost. But also, as you mentioned, because lower fuel surcharge, lower fuel cost, lower fuel surcharge, that means lower ticket price, and it will stimulate some demand for those price-sensitive passengers. But I think for the airline, the overall cost also influenced by inflation, supply chain, rising labor costs. So fuel is just one component of this. So there are still lots of the economic uncertainty that will impact the airline cost.
One of the questions that I talk about all the time is what is happening with the Chinese consumer. The government wants to stimulate the Chinese consumer. Everybody wants to see the Chinese consumer back and strong. Do you get a sense that that is the case right now? Just give me a temperature check on what is happening with the Chinese consumer. Yeah,
I think China remains the most promising and exciting, growth for the aviation market. I'll give you one example. I just back from inaugural flight of Yiwu, our fifth destination in China. Yiwu is world-known trading center, and on the street I saw so many people from India, Middle East, Southeast Asia going there to trading, to purchasing the goods and bring back to their country. These third-tier cities actually very emerging market. There's no international flights there, so we are the first carrier.
That's a business demand. Sorry, that's not a consumer demand. So you're seeing business demand quite strong as well.
Yeah.
And that's picking up. Is the dynamic changing as maybe actually tariffs start to have an impact, and you're seeing maybe patterns of trade changing? Are you seeing that being reflected in the network?
I think a tariff definitely brings some risk and uncertainty for the airline industry, but I think so far I see China consumer outbound is still strong. The young demographics still looking for new destinations in Southeast Asia to explore. For example, our Greater Bay Area is our very important home market. 1 in 4 of our passengers coming from the Greater Bay Area region. So I still see there is a strong demand from the young consumers looking forward to exploring.
Are they getting stronger? Is that demand getting stronger?
Yeah, I'll give you one number. Our point of sales, Greater Bay Area, this first 5 months grew to 60%. So I think.
In terms of how you run the airline, are you concerned about any issues about the availability of parts, about the availability of engines? These are areas that are kind of coming under the spotlight as a result of the tariff story. Are you able to absorb some of those costs? Are you worried about the availability of engines coming in for your Airbus fleet? How are you managing that story? And how are you planning for that?
Definitely. We have the ongoing dialogue with Airbus regarding our future aircraft delivery schedule. So far, the impact to us relatively small, but I think we also made a proactive approach in managing this. We made a provision to ensure continued alignment with our long-term fleet plan and also the growth plan. And I think talking about the engines, right? Half of our A320neo aircraft, totaling 5 aircraft, remained on ground because of the ongoing GTF issue. So I think this definitely impact our overall aircraft utilization because the material supply chain is still the bottleneck. That's why the engine turnaround short time is quite long. So we would like to see more clarity on this part. It's important for our flight restoration operation. So this is the part of the challenge we see.
Jeanette, great to see you. Thank you very much indeed for stopping by to kick off our AGM coverage here this morning at the IATA conference. Thank you very much indeed.
Thank you, Guy.
Jeanette Mao, the CEO of HK Express. Yvonne, thank you very much indeed. We will leave you for now from the AGM here in New Delhi. We've got some great guests coming up. Looking forward to speaking to all of them throughout the day. But for now, back to you.
All right. We'll come back to you soon, Guy. Thanks. Guy Johnson there with the latest from Hong Kong Express. And we're going to have more, as Guy mentioned, from the World Air Transport Summit in the next hour. We're going to hear from the CEOs of Air India and Air New Zealand. Plenty more ahead. This is Bloomberg. All right, some movers that we're watching here this morning. Obviously, Hong Kong Exchange is one, with Goldman lifting that target here and talking really about the pipeline, right? So more A-share listings, that certainly is one thing. Products as well. The stock is doing the opposite direction, or going the opposite direction here, just given just the trade headlines and the like here today, Belle.
Yeah, it's certainly risk off across the board, and adding to that, it's not just trade around steel, aluminum duties, but you've also got semi-names in focus too, because the Trump administration is looking to broaden their restrictions on sanctions on Chinese semiconductor companies to the subsidiaries. So you can see they're pretty much under pressure. Oil stocks, though, reacting, and this is a different story. It's geopolitical tensions in Eastern Europe, Ukraine striking deep into Russian territory. That's offsetting the moves around the OPEC Plus supply hike for a third straight month. But these names under pressure, and then broadly in the session too. I mean, yeah, we said it's risk off, and that's very much reflected in the offshore benchmarks today.
Yep, and we're watching that here. Continue to see session lows for the Hang Seng and HS Tech. We're down more than 2.5% for the tech gauge there. 8 shares also down by 210 points as well. We'll have more coming up the next hour. You're watching The China Show. Welcome back to The China Show. Not a good start to your Monday. Take a look at how these regional benchmarks are doing here this morning, and Hong Kong seems to be leading that drag lower. We're seeing now the Hang Seng down more than 2%, 2.5% lower for the 8 shares here this morning. And really it comes down to what we've been seeing with the trade frictions that seem to reemerge, the doubling of steel and aluminum tariffs from President Trump over the weekend, plus what they've been saying about this trade truce between China certainly is roiling markets here. So you are seeing, when it comes to your GMM function, it's basically stocks are being sold off, the dollar's being sold off, and we're watching very closely what happens with gold, right? So that's catching a bid after actually falling last week as well. And we're watching commodity markets very closely, just given the geopolitics, with WTI and Brent crude up some 2%, Belle.
Well, it's been a very big weekend as well. Beyond the trade tensions, it's also what's going on in Eastern Europe, and you saw Ukraine striking very deep into Russian territory. Moscow did retaliate. You've got the peace talks, the second round, that are kicking off in Istanbul today. That certainly clouds the outlook for these discussions, what exactly could be hoped to be achieved. But yes, I mean, it's very much risk off across the board, at least in the equities picture as well, because every single sector is in the red today so far.
Right, and I think it came from a lot of uncertainty about what's going to happen in this trade truce, right? This 90-day window, which we're pretty much past the halfway mark, I want to say. But it sounds like something is not working. And the fact that something has been, according to the U.S., that China has violated, it really goes to show where these trade negotiations are going at the moment. And when things look bad, President Trump starts to talk, right? And that's why we're seeing a bit of reaction as well here over the weekend. So certainly that's one to watch very closely. And that is a big theme for markets here today.
Yeah, that's right. It definitely plays into it. And are you going to see any sort of rapprochement? Will you see that call between Presidents Trump and Xi, for instance, taking place? What else is also getting a lot of attention today is a call from Morgan Stanley around the dollar.
Oh, yes. 9%, right? Downside.
Huge downside potential. So they're saying that the dollar index could fall to 91 by next year. That is, as you said, a 9% drop. But again, it's that slower growth story that could be playing into the picture as well. And you've got interest rate cuts also part of the picture.
Yeah, so rate cuts and slowing growth, they're expecting a yield curve that's much steeper as well, just given those concerns. But really, when you talk about the beneficiaries, it's really in the G10 space, they say, right? The euro, the yen, Swiss franc. They're thinking a 130 handle for yen, 125 for euro. So certainly that U.S. exceptionalism in doubt story remains intact for now.
Yeah, and maybe yen a little bit bid today, of course, on, again, that more of the flight to safety. It's back on these trade tensions, of course, flaring once again. As you said, Yvonne, China is accusing the U.S. of violating their recent trade truce, promising to take measures as well to defend its interests. That follows similar accusations from President Trump, as well as his decision to double tariffs on steel and aluminum to 50%. Bloomberg editor John Herskovitz joins us now, along with our China correspondent Min Min Lo. So, John, we can kick off with you. We had, of course, the big announcement going into Friday, and it's being very much reflected in trading sentiment this morning, but this hike on steel, aluminum tariffs as well.
Exactly. And last week was a really tumultuous week for the Trump trade policy, and we're getting off to a very difficult week with the China friction today. But the 50% tariffs on steel and aluminum came as Trump was announcing a deal between Nippon Steel and U.S. Steel concerning investment in the company. This has been in the works for some time. It was blocked during the Biden administration. It was blocked during the Trump administration for national security grounds. And this allowing of the investment to go forward is kind of a reversal for the Trump administration policy. What Trump has tried to do is show that Nippon Steel made concessions that will benefit workers, that will lead to greater investment in infrastructure, and say that U.S. Steel will remain U.S. owned and U.S. operated. Now, the details of the actual deal are yet to be seen, but this was something that Trump did in Pennsylvania. He did it with steelworkers. He tried to show it as a victory for his administration, a bit of good news for very difficult trade times. So how this works out remains to be seen, but this is how the administration has framed the deal, and using this with the backdrop of the increase in tariffs on steel and aluminum, which would benefit companies like U.S. Steel.
Min, obviously there's been a lot of back and forth on the U.S.-China discussions. What's the latest now?
Yeah, so the Chinese Commerce Ministry this morning hit back really strongly. Even though it was a holiday for them, but we got a series of headlines. The Chinese Commerce Ministry essentially saying that the U.S. has been the one that is violating the agreements that were reached at the Geneva trade talks, and essentially saying that the U.S. has been the ones that are taking all these discriminatory actions against China, including revoking the students' visa, Chinese students' visa, expanding curbs on these export of chip design licenses to China, and also expanding chip curbs as well. You were saying earlier, Annabelle, about these rules that are now being expanded to the subsidiaries of companies that are already sanctioned. And China is saying the U.S. has been the one that is provoking these trade tensions. It's urging the U.S. to really fulfill and honor the commitments made in Geneva. But the U.S. is saying the same thing of China. President Trump didn't elaborate on how China hasn't fulfilled the agreements there. But Jamieson Greer mentioned in a separate interview that he is concerned about the slow pace of the rollback of some of these countermeasures against the U.S., in particular when it comes to the flow of critical minerals to the U.S.
So that possible talk or discussion between President Xi and Trump, is that likely to proceed, do you think?
Well, it's hard to say because you have the U.S. economic advisor saying that it could happen this week, but we haven't gotten any confirmation from China. And granted, when it comes to China, oftentimes these announcements come really late, could be even as late as the day before. But at the same time, we have Trump previously signaling before, after the Geneva trade talks, he said he was going to speak with President Xi at the end of that week. That didn't happen. So how much weight can we put behind the words of Kevin Hegseth this time? That's still a big question. And of course, we still have maybe a couple of months until early August when the trade truce is going to expire. So we'll have to see whether President Xi will be willing to pick up the phone this time.
All right. Min, thank you. Min Lo there, our China correspondent. Also, our thanks to our editor, John Herskovitz, joining us there as well. Still ahead on the China show, we're going to head to the World Air Transport Summit in New Delhi to speak with Air India's CEO about supply chain pain as the trade war threatens to heat up again. We got much more ahead with Campbell Wilson. This is Bloomberg. We're still checking New World shares here this morning. Continue to see them plunge some 10% here right now. This on top of the news that they jolted bondholders on Friday with that surprise decision to defer those interest payments on some bonds. We're hearing from our sources, according to our credit team, that New World has gotten bank commitments for 60% of its loan refinancing now. So that equates to about $11.2 billion in this deal, according to people familiar with the matter. Over 20 banks have sent their commitments in writing, they added here. So certainly there is some at least progress on the refinancing talks, but not really helping in terms of sentiment here today, Belle.
No, I think it's actually the biggest drop we've seen for the stock in around 2 months, so going back to early April. But let's get back to New Delhi because the International Air Transport Association's AGM and the World Air Transport Summit begins today. And Bloomberg's Guy Johnson is standing by there with us. Guy, really great lineup of guests, including who you're joined by this morning.
We have, well, I've got sitting opposite me now, Campbell Wilson, who is the CEO of Air India. Fantastic to be with you.
Good morning.
Thanks for stopping by. You are transforming this airline you are bringing in huge numbers of aircraft into a market that is absolutely booming, but you're being throttled by the availability of the aeroplanes that you can get. Airbus, Boeing, problems with supply chains, problems with engines, all kinds of issues that have affected the OEMs and their suppliers. How big a problem is this now? Is it getting better? Are you beginning to get to the end of this? Are you seeing light at the end of the tunnel?
Well, over the last 3 years of our transformation, we've gone from less than 100 aircraft to 300 aircraft. Some of that's been through mergers, some of it has been through the delivery of aircraft, and more than 100 aircraft have been added to the fleet, so one a week. So there has been availability, albeit most of that had been produced during the pandemic and not delivered to the customers originally intended. But the new deliveries for us start in earnest towards the end of this year. It is later than we'd hoped, slower than we'd hoped. It is constraining our ambitions a little bit in the short term, but the long-term opportunity for this market is massive, and so we're very, very confident.
And the message is that Airbus and Boeing and the engine suppliers, they're fixing it, yeah?
I think there's a greater sense of confidence this time at the AGM than there was this time last year. People seem to be getting ahead of a problem, and there's a lot more optimism about the future.
More airplanes coming? More orders coming? Are you done yet? Is there a greater opportunity?
Well, goodness, we've ordered 570.
It's quite a lot.
There's some digestion that will need to happen for those, but this is a growing market, a hugely growing market. The upside is really significant, and so we will probably continue.
The rumour doing the rounds in the halls here is you're about to place another big order.
We never comment on speculation.
All right, so we're not going to see you at the Paris Air Show.
Only if I'm on vacation.
He chuckles. Okay, so let's see what happens there, only if he's on vacation. Mr. Modi's going to be here a little bit later on. Yes. What do you need to hear from him? What do you want to hear in terms of the aviation story? The government here clearly gets the fact that aviation is quite important. They're building lots of new airports. What needs to happen now to make the market really deliver on the potential that it offers?
Well, I think it's really the synchronization of the ecosystem. The government privatized Air India for a purpose. There's a lot of private capital and expansion going into that. It's offered private concessions for most of the big airports. There's been a huge expansion in the number of airports in India continuing to be built. There's changes in taxation law with respect to the Cape Town Convention for aviation lessors, but there's a few changes with respect to tax, ease of doing business, customer experience going through the airport, the adoption of more technology, perhaps simplification of visa requirements. Right. All of these things coming together to make in India a equally competitive transit.
Have they come
experience.
together yet? Are we
there is certainly awareness of what needs to come together. There is dialogue between the stakeholders, but it's still got a little way to go before we're fully comfortable with where
One
it
of
is.
the other things I suspect that you'd probably like to know is what is going to happen with the trade story, what's going to happen with the tariff story. You import a lot of stuff in from Europe and, more importantly, the United States. What do you want to hear? What are you hoping to hear? Is it that there's going to be a continued carve-out for aviation equipment, that you're not going to be affected by any kind of a tariff war? What do you want?
Well, of course, we wouldn't want to be affected by any tariffs. Of course, we would want trade to be as free as possible. Of course, we'd want airspace to be as open as possible. We're a business after all. But I think, as much as anything else, we want certainty. The uncertainty is difficult when you're making investment decisions, where you're making basing decisions, and I think that's a common theme around the AGM this weekend is we all want a little bit of certainty.
And when do you think you're going to get that?
Well, I don't know. That's uncertain.
Yeah, okay, fair enough. Is it affecting the consumer? Is it affecting business demand? Is it affecting what you see in terms of the numbers that you're getting in terms of...
So from what we see so far, no. There are always impacts of one sort or the other on travel flows, but we don't see anything in particular, at least for our business, for our geography, for our market segment, just yet.
Are you seeing any impact in terms of America becoming a tougher place to visit? Are you seeing any impact from what's happening with students? Are you seeing any impact from what's happening, maybe not at immigration, but just in terms of the overall tone of what is happening in America right now? Is that impacting demand in and out of the US? Are you seeing that again in your numbers?
So we're not seeing any numbers to that effect. But of course, there's all anecdotal stories. Particularly the student market. There's a very large student population in India of Indians in the US. I think they've contributed hugely to the US economy, and just you hear people thinking about alternatives now.
So not immediate plans, but longer term plans potentially.
Well, obviously, it's a relatively new development, so people are digesting it. But it does seem that people are more willing to look at alternative locations than perhaps they were before.
In terms of which way people are looking, how are you, when you think about fleet plans, when you think about how the network is going to develop going forward from here, Where are you looking? Where do you think the biggest opportunity exists for the company?
For India, really, the opportunity is everywhere. This is already the third largest domestic air travel market in the world. It's growing at 8 to 10% a year, yet it has a propensity to travel by air 1/5 that of China. So if it normalizes to China's level, it's going to be massively larger. Internationally, it's depending on how you measure it, the 8th or 6th largest international air travel market in the world. But Indian Airlines have had a relatively small share, less than 20%. So the upside of providing Indian carriers offering service non-stop from India to the places people want to fly.
But is the opportunity, Indigo's here as well, obviously they are looking to capture the domestic market. Obviously they've got an international aspect to it as well. But is the bigger market internal or external? Is it going east? Is it going west?
So for us, we've always been a predominantly international carrier. 65% of our capacity is deployed internationally. We see our biggest opportunity being long-haul international. We've more than doubled the flights into the UK, double flights into North America. There's a 35 million diaspora spread around the world that we want to serve. So we actually see opportunity in both domestic, short-haul international and long-haul international, but our focus thus far has predominantly been long-haul international.
Let me ask you the slightly tricky question. Pakistani airspace is currently closed. I'm assuming that has a fairly big and meaningful impact in terms of how long it takes to fly to various key destinations. You're not going to put a number on what that's costing you right now, but it is significant, I would imagine.
It is significant, but we've been able to sustain a non-stop operation to our North American cities with a couple of exceptions where we do an en route refueling stop. We'll continue to offer non-stop service to North America. The European flights continue to be non-stop, albeit an hour or so longer flying time, but it's still much, much more convenient to fly non-stop from India than transit somewhere in between, notwithstanding a slightly longer flight time.
And is there a conversation with the government about how maybe you are compensated for that? Is that something that you think will ultimately hit your bottom line or another bottom line?
Well, no, something will certainly hit our bottom line. Discussions we're having with other stakeholders we'll keep behind closed doors.
Okay, great to see you. Thanks for stopping by to come and see us. Campbell Wilson, the CEO of India. A fantastic conversation, many more still to come. Guys, back to you.
That's Bloomberg's Guy Johnson there in New Delhi. As we said, really great coverage of IATA's AGM and the World Air Transport Summit for us. And subscribers can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions that we talk about. Plus, become part of the conversation by sending us instant messages. Check it out at TV Go. We've got plenty more ahead. And this is Bloomberg. Some of the global headlines that we're following this morning. In Iran has rejected a UN nuclear watchdog report accusing it of nuclear violations, claiming the agency is motivated by politics. The report says Iran has expanded its stockpiles of near weapons-grade uranium and failed to report nuclear material and activities at 3 locations. Iran says the findings are based on fabricated data and repeated that it's not seeking atomic weapons. OPEC Plus has agreed to increase oil output for the 3rd month in a row, despite reservations from key member Russia. Oil-producing nations say they're adding 411,000 barrels a day to the market in July. That matches increases scheduled for May and June. The supply hike is seen as a move by Saudi Arabia to punish overproducing members, recoup market share, and satisfy President Trump's desire for cheaper oil.
All right, checking markets here right now. It continues to be a down arrow story across Asian markets here, with Korea as the exception, of course, as they count down to their election. Their markets will be shut there on Tuesday. But then again, the broader picture is still risk off. Look at Nikkei. We're down 1.4%. Seng continues to be the loser on the board. They're the biggest one. We're down more than 2% here right now. U.S. futures are also seeing a bit of pressure here this morning. Let's bring in our managing editor for Asia Equities, Lianting Tu, joining us now with what really is driving this broad sell-off here right now, Lianting.
Yeah, I think the rising trade tensions is really weighing on investors because right now there is just a vacuum of news. China is off, mainland China that is, and over the weekend I think trade tension headlines are really occupying all of our top pages. And also there's also home sales data that was quite negative from the weekend. So overall I think people are just expecting some kind of further negative headlines from Trump And of course, this morning, China side also rebuked Trump's accusation that China violated Geneva talks. So all of that is just really just not not helping the Hong Kong stocks. But by all means, if you look at year-to-date performance, Hong Kong stock market is still ranking at the top of the global equities worldwide this year. So overall, I think there's probably a little bit more downside just because Hong Kong has done quite well year-to-date.
It's really difficult for individual corporate news to break through, but one that has done it this morning is New World, and we're really seeing those shares under pressure after they deferred some perpetual coupon payments. But just talk us through the details, because we also had some headlines around bonds, or a loan rather, and the commitments made from banks so far.
Yeah, so there's some bad news, a lot of bad news, I should say. There is also some positive news. On the bad news front, of course, it's a shocker to global investors that they skipped a coupon payment on a perpetual bond. And yeah, in the in the bond contract, they can choose to skip the coupon payment, and that is not a default. But to a lot of investors, that is sending a signal that the company is struggling with liquidity. And given that the company is also in the middle of getting this big jumbo loan deal done, this is really relatively negative. I think right now, even with the positive news on how the company is securing more loan commitment for that deal, I think the next thing people are really watching out for is whether they can actually finalize the refinancing of that loan deal.
All right, that was our managing editor for Asia Equities, Lian Ting Tu there. Thanks very much for joining us. And of course, as we've been discussing, it's really that risk-off tone across markets today. Pretty much every sector, I think actually every sector for APAC at least, is in the red so far. But these are some of the steel makers or aluminium names we're watching too today. And this is after President Trump pushed through with increasing levies, or plans to increase levies on imports of steel, aluminum into the US. So going from 25 to 55, or 50% rather. So that, again, having some bearing on these names in this region.
Yeah, certainly this is in some ways to aid the sort of U.S. steel and Nippon steel deal that was reached between U.S. and Japan. And Trump says that there's still a ways to make it so that it is U.S. owned. But yes, this is what we're seeing in the fallout from that here this morning. And obviously we're watching things oil, just given what we heard from OPEC Plus. So yes, raising production as expected. But then again, the price of crude is actually up this morning. So it doesn't seem like the supply concerns and the like is really weighing on the oil price in particular, because of the geopolitics and the like here. That certainly seems to see why we're seeing that pop in oil. But oil majors, at least in China, are actually heading lower. It might not be a news story, but really just the downdrift that we're seeing across risk assets here this morning.
Yeah, I think oil is interesting because, as you said, we are seeing Brent crude and WTI, both of those advancing. But that's also the story around what's happened in Ukraine and Russia over the weekend, because we saw Ukraine carrying out a series of drone strikes really far into Russian territory. Moscow has pushed back on this, but it really complicates, of course, the outlook for peace talks, because the second round is kicking off in Istanbul later Monday. So anyway, that's the state of play for oil. Let's take a look at what's happening in the EV space as well, because you are seeing, again, some interesting moves. We had a lot of the delivery numbers for vehicles, and they were pretty strong across the board. But you've got to wonder how much this line from the auto body is playing into the picture as well.
I mean, the price cut certainly was something that was a big concern last week, and certainly they're talking about this vicious competition and really where is it? What's the end goal, right? We had a guest just last week say there is no winner, really. But you take a look at what's really going on. It's interesting, though, because there was talks about this Xiaomi SUV, basically saying that they could do some mass production of that. There was also this talk about, really how interesting the whole sector is right now. But then again, right now it's all about trade headlines that's really dominating risk sentiment here this morning. You take a look at your GMM function, and there's a clear trend here where equities are being sold off. Dollar is also being sold off. And you're seeing that bid across most Asian currencies. Look at the Kiwi, look at the Aussie dollar. We're watching the British pound as well. That certainly was one of the key ones that Morgan Stanley noted, that under that dollar weakness, the pound could actually benefit. And commodity markets are still catching a bid here this morning, and bonds, in particular in Japan, continue to see that sell-off here, of course, after that auction last week as well. We got plenty more ahead. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading into that lunch break, and it looks like we could use a bit of a breather here this morning, just given the sell-off that we're seeing across equities here in the region. We're down close to 1.5% on the Nikkei as well. The yen is actually catching a bid here amidst this dollar weakness that continues here once again. And your Japanese JGB yields are ticking slightly higher here right now. We're above 1.5% for your 10-year JGB this morning. So, yes, it is risk-off overall. And, yeah, I mean, we're seeing it basically across the board.
Yeah, I think every sector for the MSCI Asia Pacific Index is in the red today, and you can see it down 0.8%. Really, of course, as you said, it's that story around trade and tariffs that are playing into it. Also, some interesting lines around the dollar, for instance. Morgan Stanley is saying that the dollar gauge could drop a further 9%. So, yes, but we can also take a look at the headlines from a conference, because there was a Seng conference in Hong Kong on Friday, and this is really a chance to hear investment picks from a range of different hedge funds who can essentially make the case for why they're really backing or shorting a stock as well. But let's bring in our guest who was there for that. Sean Ho is joining us this morning. He is the founder and CEO of Triata Capital, and your pick was PDD, which is an interesting one, especially because this stock has been really pressured by trade and tariffs and the end of the de minimis and concerns around the cost for export from China. Why exactly did you choose it?
Yeah, so at Triata Capital, we're very long-run focused, right? So like Warren Buffett said, in terms of picking a company, we like to find the company that can compound through time. So at Triata Capital, we're really focusing on three things that's generating a great company. First, the TAM has to be big enough. Second, it has the need to have a strong competitive moat. Third, this competitive moat has to be long-run sustainable, right? So back in PDD, I think a lot of people know the domestic story quite well. Yeah. It's the second e-commerce player, 21% market share, etc. But really, we think what's not well understood is this Temu business, which is their overseas e-commerce part, right? So first of all, in terms of the TAM, it's huge, right? If you look at their MAU right now, overseas, they're actually more than Amazon, right? So a lot of people probably don't know that. Second, if you look at their competitive advantage, we actually did a lot of analysis in terms of using alternate data, comparing price versus Amazon Haul, etc. They're still trading around, say, 20 to 60% cheaper on each of these items on goods, even after a tariff, after in April with a lot of price hike, etc. After 13%. They're still like around 10 to 30% cheaper on each of these items. So we do think they have that strong competitive edge. And is it sustainable or not? We actually did a lot of channel check, network check within Shenzhen with a lot of overseas e-commerce player.
It's a pretty challenging environment, though, as Bella kind of highlighted, right? Domestic competition is quite intense. You have rising merchant costs, and then you have the tariff threats as well. Mm-hmm. Are you concerned at all about the profitability challenges?
Yeah, so far, if you look at the valuation, it's actually very much asymmetric on the upside. That's really the area where we like. So if you look at it, it's trading around 9.7x PE, around 36% of their market cap are in cash, right? So basically, you're buying the domestic business for cheap already, but you're getting the overseas e-commerce business for free, right? So yeah.
You talk about that moat, and you think the moat is secure, but the business model that Temu has, connecting factories direct to customers, is something that can be replicated, is being replicated by Alibaba.com, for instance. Do you think that moat can actually withstand those moves?
Yeah, so that's actually the biggest debate around these stocks when people look at it, et cetera. So I think it's really down to their execution, their management team, et cetera. So when PDD called them when they're going IPO, I actually met the founder, et cetera. He's a very focused, highly efficient, and a younger team. Right, so we think that makes a big difference in terms of the way they execute. For example, Amazon actually outsourced more than half of their goods from China as well, and they launched the Amazon Haul, which is a direct competitor of Temu on overseas. But we channel check a lot of the overseas e-commerce guys. The different execution is still very different. So very much, if you look at all the e-commerce players within China, they actually, like Temu, they'll send people within the company working there 24/7 to help them on logistics, help them on execution, to really increase a better ROI.
It's interesting, your target, right? The stock's at, sub 100 right now, and you're saying this could fly to $261. Tell us how we're going to get there.
So that's really our bull case. So we run various DCF analysis because as a value investor, at the end of the day, we value the company really on the free discounted cash flow of all the futures. So on the bearish case, we have around like $146, so around 50% upside, to the bullish case around 2.6x upside.
Another headwind that I could see is also from China regulators, and there is concern about this race to the bottom in China and this extreme pressure and cost cutting that you see from Chinese businesses. Even, for instance, last week it was the story around platforms like PDD needing to give more support to merchants that are on the platform. So how do you factor that into your case as well? And do you see that impacting margins, for instance?
Yeah, so we track a lot of these data quite closely, and it impacts the stock very much, especially in the shorter term. But as a long-term investor, we think it's a little bit less sensitive to a lot of these. For example, right now in China, there's a lot of subsidies towards a lot of the white goods, electronic, etc. And PDD, they might need to use their own pocket to subsidize a lot of this. But a lot of these will be more one-off fashion. Same on the merchant side, right? They need to pump up and support some of these merchants, which we think is a good thing in terms of brand in the longer run. But their competitive edge is still there, right? It's about the brand image towards consumer side, where you get the traffic and you're able to sustain that in your algorithm and continue to have that flywheel effect.
Do you see PDD shifting its listing back to Hong Kong or doing a secondary listing here? And do you as well see any impact from the reporting that we had that Shein is looking at listing here instead of London?
Yeah, so for that, we don't have any more insight than whatever the company disclosed.
I was going to get your take on just overall AI. I mean, your fund has done quite well earlier this year because of the whole DeepSeek moment. The market sentiment and narrative seems to have shifted since then to more trade. But I'm just wondering, well, have you made any changes in the last few months or so? And is AI still the best way to kind of ride the volatility now?
Yeah, so at Triata Capital, we're very China-focused. We're focused on the TMT and consumer segment. And within these, we actually wrote a lot in our quarterly newsletter around, I would say the portfolio-wise, 1/3 is very much AI-focused, 1/3 is AI-related. So what that means is if you take a step back, look at China AI segment, we still think there's tons of opportunity, even versus the US, et cetera. So within AI, there's three segments. One is the AI brain, so sort of any of the LLM model like DeepSeek, like OpenAI. You have the data that be able to train a lot of these brain. And then third, you have these potential super app that connects to all the consumer and be able to revamp and monetize these efforts, right? I think in China, on the brain side, there could be some restrictions. It might be harder because a lot of the GPU, et cetera. But on the second and third part, we think China could be really in the lead, right? Because it has 1.4 billion population size, collecting various amount of data, et cetera. So that gives them the lead. And also on super app, generally from the consumer side, China is very willing to adapt, right? So you can see the like of Tencent, they launched like Yuanbao. It was a very quick adapter, et cetera. So we think the second and third part is where we spend a lot of our effort, trying to understand the different potential businesses, where it could be the long-run compounder, et cetera.
What's your methodology? What's your path to understanding exactly the opportunities that there are?
Yeah, so for us, first, we're based in China. So myself, the investment team, their team, we're in Shenzhen. So on-the-ground research is very important for us. Second, we use a lot of big data, alternate data within our research. So anything that's digitally, so you can think about anything that's digitally, publicly, engagement data, social media, et cetera, to understand the competition landscape, the unit economics, et cetera.
What is that data telling you in particular? I mean, how is it different from what you're seeing from traditional data, for example?
I think a lot of them, it comes down to the nuances and how you do the research, right? So for example, in PDD, right, it's quite a widely debatable stock. The stock been down quite a bit after the earnings, right? Because the management, in effect, probably didn't provide a lot of transparency. But within the data, for example, for us on TMU side, we're able to break it down country by country, product by product, their competition versus Amazon. Are they cheaper? Are they more expensive? After the tariff hike, what is the exact impact? The GMV drop, et cetera, et cetera. What is the dollar advertising dollar in? So you're able to see the business in a much more clear picture.
Very interesting. Sean, thank you so much. Sean Ho there, founder and CIO at Triata Capital.
Thank you.
Of course, talking about PDD and the rest of the AI trend in China. We got plenty more ahead. This is Bloomberg. We're heading back now to New Delhi and the IATA annual meeting. Guy Johnson is there and standing by with our next guest. Guy.
Absolutely. The CEO of Air New Zealand, the outgoing CEO of Air New Zealand, Greg Foran. Nice to see you again, Greg.
Good morning.
So you surprised us all with your decision to step down. I don't think anybody saw that one coming. Still feels like the right decision?
Oh, yes. Something that I had been, thinking about for a period of time. Actually, when I took the job, it'll be about 6 years by the time I do step down.
Yep.
I had in my mind that would be about the right time. I've got other things that I want to do, haven't decided what they are. But, by then succession starts to come into play. You've done a couple of good 3-year terms.
Yep.
And, I know I leave the airline in a good spot.
Okay, so you leave the airline in a good spot. Do you have any idea when we're going to see your replacement being announced? Do we have any news coming?
Look, I'm guessing probably about 3 months away.
Right.
Something the board does. They go through a process.
Yeah.
They look around the world. It's a great gig. It's one of the best businesses that you can run in New Zealand. It's interwoven into the fabric of the country. So there's going to be some great candidates. The board will have a look internally and externally. Probably about 3 months.
What challenges do you leave behind? You haven't fixed everything. We've still got issues surrounding aircraft availability. The challenges that I seem to speak to every CEO about at the moment are definitely represented at Air New Zealand. So what are the big fixes that still need to happen? You're leaving the business in good shape, but...
Yeah, well, you actually hit the first one on the head in terms of aircraft availability. And, we're a reasonably small airline. We've got just a tad over 100 aircraft, and we unfortunately on our wide bodies run the Trent 1000, and that's full of challenges.
It's the Rolls-Royce engine.
Yeah. And then on our A321s, we got the Pratt & Whitney 1100. So we sort of got the duo of two of the most difficult engines. We're still working through those. Pratt & Whitney, I had a great discussion yesterday with the team there, and we're starting to see some light at the end of the tunnel there. In fact, we're putting some services on as we speak, getting some more seats out there as those engines become available. And the good news is we're making some great progress with Boeing on new planes. So beginning of next year, we'll get the first 2 of what will be 8 new 787s.
You just put a reconditioned aircraft into the market as well, haven't you? So
we have.
So things are improving. Just give me a sense of what's happening in terms of the market. You made a big push into the west coast of the United States, North America. How's that working out? Does the Trump administration make that maybe look like a less wise decision? How's that market in particular working out?
Yeah, look, the US actually continues to be really good for us. We're up about 103% on passenger numbers from where we were in 2019, and it's gaining momentum. I'm not seeing anything at the moment that would indicate any concerns I've got, that I read about. Anecdotally, I hear that a number of people in the US are very keen to come to New Zealand.
What about New Zealanders going the other way?
Yeah, no real issues with that that we're seeing. So it remains good, remains strong. And of course, New Zealand not only is clean and green and all the things that we know about, but it's pretty stable and safe too. So I think that heralds well.
Okay, but that's fine if you're an American going to New Zealand, but the caution at the moment seems to be New Zealanders or the rest of the world going to the United States. You say you've heard that anecdotally. Do you expect that to show up in the numbers at some point?
No, I'm not seeing anything at this point. Now, I can't predict exactly what will happen, but Kiwis are pretty good at travelling. They work out how to navigate. They're used to travelling. It's 2,000 kilometres to the next nearest landmass. So we're used to getting out there, and as I said, I'm not seeing anything at the moment.
In terms of the cost that you're seeing in the business right now, what I'm beginning to hear around here is that, particularly for the OEMs, particularly for the engine guys, they're talking about passing on tariff costs, just costs that are going up at the moment, onto the airlines, which ultimately I suspect will be passed on to the customers. Is that the conversation you're having as well? Are your costs going up? Is it going to be more expensive to buy kit, buy spares, all of that kind of stuff?
The simple answer is yes, and we are seeing that, and frankly we've been seeing it for the last 12 to 18 months, and we're not seeing any sign of it abating. And it's actually not just things like spare parts or aircraft. You're seeing it in the entire ecosystem. You're seeing it in airport charges. You're seeing it in aviation security. Absolutely. And, you got sort of 3 options here. You can mitigate it, which everyone should do. How do you get better at running your business? How do you use AI, digital innovation? You can end up absorbing some of it, You don't like doing that for too long because that's an impact on shareholders. Or the third thing is you have to pass it on, unfortunately. But that is what we're seeing.
A lower fuel price is going to compensate?
They help. They help. And thank goodness we've got them. Otherwise, I think we would really see an impact at some point on demand. So those lower fuel prices absolutely do assist us.
Do you get a sense that the global economy is slowing down right now, just in terms of the kind of demand picture that you are seeing? What are you seeing in China? What are you seeing around the world more broadly? What does the demand picture look like?
Yeah, look, I think it depends, like a lot of things, on where you stand. So New Zealand, a bit slow out of the blocks post-COVID. You know, we were one of the last countries to get open. Tourism, for example, into our country just a few months ago was running at 83% of pre-COVID. Today it's running closer to 90%. So we've got momentum because we've come from a lower base to begin with. I would say to you that one of the things I sense sort of, I guess, more around the world is more of a two-speed economy. So I think as, you know, incomes bifurcate even further, I think what you're seeing is a lot of people with potentially more wealth, premiumisation of airlines. You know, we're adding 23% more seats in our retrofitted aircraft up the front. But at the same time, you've got a reasonably long tail of people that probably have less disposable income. So it's an interesting market. You know, discounters continue to do well because you've got that long tail. At the front end, you've got people doing really well as some other people are actually generating more wealth. So it's if you like, a tale of two halves.
Greg, great to see you.
Good to see you.
Thanks for stopping by. We'll look forward to hearing what you do next and the announcements on that fairly soon. Greg Foran, the CEO of Air New Zealand. Back to you in the studio.
Great interview there, Guy, and that was Guy Johnson in New Delhi for us. We've got plenty more ahead. This is Bloomberg.
Well, India's military has confirmed it lost an unspecified number of fighter jets in last month's clashes with Pakistan. Chief of Defense Staff General Anil Chauhan also told us the conflict never came close to nuclear war.
What is important is that not the jet being down, but why they were being down.
But a jet?
Why? Why they were. So the good part is that we are able to understand the tactical mistake which we made, remedy it, rectify it, and then implement it again after 2 days, and flew all our jets, again targeting at long range, which I said.
Pakistan claims 6 Indian jets were downed. Is it correct in that estimate?
Absolutely incorrect, and that is not information which I said is important. What is important is why they were down. That is more important for us. And what did we do after that? That's more important.
I guess the world is asking for clarity because these are words that came from Pakistan, whether it was 6 or whether it was fewer. So just to get clarity, Indian jets were downed, but the number 6
As I said,
is not
numbers
inaccurate.
are not important. Why they were down, what mistakes were made, that are important.
What's the state of relations between Pakistan and India at this point in time?
We are back to a normalization of relationship in the sense that we have an agreement. We can't call it ceasefire. Cessation of hostilities is there. And we are seeing that on the borders, whatever forces had come into place, they go back. So it's hopefully it will remain like this. The state of a relationship depends exactly on how Pakistan will behave in future. What India has done is we have laid clear red lines, the limit to our tolerance against terror. So the state of relationship is purely dependent upon how Pakistan is behave in future.
The world was watching developments really closely because both Pakistan and India are nuclear powers. What was the risk of a nuclear war erupting?
I think none whatsoever, because I personally feel that there's a lot of space between conduct of conventional operations and the nuclear threshold. And we have demonstrated it not once, now thrice. So it was during Uri, then it was your Pulwama, post-Pulwama, Balakot strikes, and now. And what I personally feel, one of the experiences from this particular conflict is not only in this escalation ladder, which we continued with Pakistan, in each of these ladders there are much more sub-ladders which can be exploited for settling out our issues without actually raising that nuclear bogey. That's too far-fetched.
That question was asked because the U.S., in fact, President Trump said that the U.S. managed to stop a possible nuclear war.
So I can't comment upon that, but there was nothing like that between us and Pakistan. And our channels of communication with them were always open. And that's one way to control escalation. That I think was never on the cards.
That was India's Chief of Defence Staff with Bloomberg's Linde on the sidelines of the Shangri-La dialogue in Singapore. And taking a look at market action now, because we are firmly in the red across the board today. But some of the sectors that are standing out in particular, one of those are the semiconductor names. And again, it's really just all revolves around trade. It revolves around tariffs. What we understand is that the US is looking to widen sanctions on certain Chinese semiconductor companies that are already sanctioned to the subsidiaries, so extending that crackdown. And you see these names under pressure so far today.
Yeah, I mean, what's really fueling all this, as we've been talking about, is both sides, right? The U.S. and China are accusing each other of walking away from the terms of this 90-day trade truce last month, right? So Trump saying that China violated a big part of that agreement as well, made in Geneva. And we heard from the response from Beijing here this morning. So that in itself is enough for risk sentiment to really just sour. And you're seeing it, despite the good news that we're seeing with BYD sales, for example, we're seeing the EV sector as one of the biggest sectors that are at a loss here this morning and falling. And if you wanted to look for any green shoots, there's only one-ish, two-ish stocks that are doing quite well.
1.5, maybe we could say.
NetEase is pretty much flat now. But Pop Mart, I guess Labubus are always a safe haven.
Labubus keep on giving. That's what I'm really learning here. The Pop Mart craze, there's really no end in sight to it.
Yeah, if you want to look for an alternative, it is maybe the whole Labubu story. It continues to talk. We're talking 225 for the stock here right now.
But also just on that sort of the Gen Z embrace, well, it's certainly also been for NetEase, and we've seen that stock trading around an all-time high for the first time in 4 years. So a lot of demand for game stocks, essentially, and you can see that there. But as we said, Pop Mart continues to stand out. That's it for the China Show. Insight is next.